Okay, so we had a very big break in gold, and gold broke substantially to shake out quite a lot of weak hands, and that's not surprising at all as far as I'm concerned. I've been warning you all along that this is the danger of becoming sleepy when you have a parabolic move and you don't work with tight stops. Now that was the first warning. My line here, first warning, by the extent of the fall, is now telling me that there is a fair chance that my 1, 2, 3, 4, 5 is in place. Now, could I be wrong? Of course. Could I be wrong and it could shoot back up to the previous high and just continue to run? Yes, yes, yes. This could definitely happen. But I'm just working with conservative attitude here. Things that work with some sense. We don't always get the privilege to inject some sense into a parabolic move, but that's what I'm trying to do. I think that there is a fair chance that the move that started way back here as a 1, 2, 3, 4, 1, 2, 3, 4, 5 is over, and that will call for an extended correction. So we're not going to go back above this high very soon. That doesn't mean we're going to crash immediately. No, it could trail sideways and sort of drift sideways to down. The correction is not going to be 2 days. The extent of the fall is telling us the correction is likely to last for quite a bit of time. So I would suggest that there is no rush to run in and buy. You do what you want with this information. You may disagree with me. You may think that it's not going to stay here for long, it's going to shoot back up and just soar. You might be right. I'm just telling you that if you do this kind of entry and exit on a margin, be very careful. Be very careful. Work with tight stops because to get a knock of the extent of the fall that we have witnessed here without having a stop and being on a margin, that's a big knock. That's a big knock. So that's what I would say right now concerning spot gold. I see the movement in the other metals. They also declare that we are now in a correction, an important correction. Take a look at silver. Silver also had pretty steep decline here. I think it went to 122 or something, maybe slightly exceeding there, 122. And here it touched just under 95. So you work out, this is almost 25%, 25% haircut. So some would say, well, the correction is done, that's it, we are going back up. Well, not so fast. I think that the time scale should be taken into account. What I see here as a possibility is that the rally that began way back down here in November, roughly 7th of November 2025, may have found an end with a 1, 2, 3, 4, 5. I think the extent of the fall is definitely a message. Yeah, it's definitely a message that we are now into a correction. That doesn't mean we are going to slump immediately. Anything could happen now. Depending on the structure of the market, if you have lots and lots of weak hands and they need one small knock to get knocked out, it might continue to slide. The market will sort itself out. What it seems to me here to be the case that we have terminated an impulse wave. With this break, that's a message. That's a message. Here's my line warning you if it breaks this line, and it did. I think that we have to take this into account now. I'm going to go to the daily because I think we have an interesting and you can see the parabolic move. These moves don't last forever. We do have some good news for the bulls despite this break. The good news is that the COT doesn't look like investors are euphoric despite this meteoric move. No, they are not euphoric. So the extent of the run is we have still room to run to the upside according to the COT. Okay, so that's good news. This is the 21 moving average. If you study this chart, you will see that it's been really running, supporting the bulls here on a number of occasions. You can see what it did here. It's the black line. You can see what it did here. And this is not log scale. This is just normal scale. And I think that we might be coming for a meeting with the 21. Now, if I go by the strict conservative assessment, I would say at the very least, we should go back to 75, which is the 50 moving average. You can see the line coming up here. That was also a line that supported the rally over many, many months, but of course in its own way, yeah, keeping distance from the 21. 21 was closer to the market. So I don't exclude silver going back. That's not going to happen in 2 days, but you never know. But going to 75 will not shock me, will not surprise me at all. And I don't think it'll stay there for long. I don't think that we are going to 60 or under 60 or under 55 and stay there for 2 weeks. No. That is extremely unlikely to happen. If it does happen, if I'm wrong and it does slide towards 60, just buy as much as you can. I have a close relative that I advise, and I told him if it slips under 70 at any point in time, just buy as much as you can. As much as you can. You have to give it a bit of leeway, because if you have an avalanche of selling, you know, these are, it's all based on these margin calls, yeah. They can extend, the avalanche can extend, but it very quickly reverses back up. So if it does deep under 70, it doesn't mean can't go lower, but I bet my money it's not going to stay under 70 for very long, maybe just a few hours, or maybe just a few minutes, I just don't know. But my point is that this rally has very long legs to the upside, very long legs, and if we can get a gift of buying it at 75, 70, I wouldn't hesitate, quite frankly. I wouldn't hesitate.